And here we are again at OrangeQuant.com in the hall with the Mountain King. And I'm Dennis Hudson, your host, with your S&P forecast. And in case you're wondering why this is up from Yahoo Finance, this article on Alcoa's earnings missing the forecast, instead of us having up the usual indicators from FLIR 2, H205 and so on, I wanted to put some context into what we discuss, and I'm going to explain this very briefly. It'll only take a minute or so. And I'm doing this because I've realized that a lot of you who come here to see this, the H205 and synthetic trendline indicators, you also would appreciate some context in this forecast. Now, you may have noticed today, Monday, January 11, 2010, that the markets opened way up. I mean, it looked like they were going to go for the gold, and they immediately tanked. Now, why is that? What's the context? Okay, you got to get up pretty early in the morning to follow all this. But what happened was, overnight, like I live in the mountain time zone out in Albuquerque, New Mexico. So it was about 4 a.m. my time, I guess 3 a.m. So it's about 5 a.m. Eastern time. And there was all this buzz on Yahoo, which a lot of people use. You have to understand how powerful an instrument Yahoo is. Anyway, there was buzz out there that the overseas markets, Asia and Europe, were way up. There was also buzz about how the market was anxiously waiting for these earnings forecasts and earnings reports, because it is earnings season, and that everybody was anticipating that earnings would be great and yada, 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 things would go up. Well, when I see that kind of thing, I look at that kind of stuff with a very jaundiced eye, I have to tell you, after long experience, and you too, probably, because most of you are experienced traders. You see, it used to be that you could tell the time of day, you could set your watch by it almost, that if the foreign markets were up ahead of us, that our markets would go up too. But things have taken a strange turn, and there's a lot of manipulation out there going on. They've moved from manipulating stocks to manipulating sentiment in the world. Now, I'm not, pardon me, I'm not accusing Yahoo of doing that purposely, deliberately, but I'm saying somebody is feeding stories out there to fool the people here. So basically, a lot of fools rushed in this morning, and of course they got killed pretty quickly. So after the morning frenzy, what happened was everybody just kind of got sober again and pulled the market down. And then after hours, we saw what was kind of probably driving that, is that there was some knowledge out there ahead of time of the Alcoa story. Now, moving right along to the misbehaving S&P 500. So, as you know from last week, H205 had called for a Tuesday inflection last week on the S&P 500. Did not happen, and so our accuracy on the H205 is now down to about 85 or 90%. Not bad. Now, as you also know, starting last week, we called for last week itself to be an inflection, and already it has violated, this was last week's week there, that blue one, and as you can see, starting out this week, it has already violated the high of last week. So, technically, and because I'm a bit of a perfectionist, it means that our forecast, as last week having been an inflection, has failed. But it's so close, it's so very close, I'm not willing to abandon ship just yet. because I have learned over months of trading with H205 synthetic trend lines and FLIR and Tau and IOTA that they don't lie very often. So for it to be this close, I think we are still looking at that inflection. Maybe it was merged between the 2 weeks, but I think what we're ultimately going to see here is a pattern that might look something like, it might look like about like that. It's going to be engulfing and it's going to be bearish. That's my theory on this at this point in time. Trying to turn it all red for you so you can see what I'm talking about. That's what I expect to happen. It may not. We'll just have to see. Sometimes the FLIR suite of indicators will miss something by a period or so, but it means there's something in the wind and it's coming. Whatever it was that was indicated is coming, and I see that definitely coming. Now let's look at the damage from last week's bad call on the daily chart. And here, if you were trading the SPY, that is the spiders on the ETF on the S&P 500, and let's say, and this is Tuesday right here that I'm pointing to, if you got in there at about 113.70, which would have been the close of Tuesday, and stayed short during that period of time, then by now you've lost about $1, okay, on a short position, $1 per share. So if you had 10 shares of the SPY, you've lost $10. If you had 100 shares, you lost $100. Now, if you were in options, if you took out some puts, well, then your situation is probably a lot more dire. And this week being options expiration week, again, some context here, they probably aren't going to drop it back down that much. They're probably going to try and kill you in the puts. That is typical Wall Street behavior. But then next week, and I hope you didn't buy puts this close to options expiration, like buying them last week. You only had about 10 days, and that's cutting it kind of close. So, assuming that you exercised considerable wisdom, you would have bought, let's say, sometime last week, near the high of last week, and I have to bring that. Let me see. This is the SPY. Yeah, so this is a SPY daily chart, and if you bought somewhere around one of these highs here last week, in the belief, as we forecasted, that last week was an inflection week, and your option doesn't expire until sometime in February, let's say, then I think you're going to do just fine. Meanwhile, if you've just shorted the ETF directly, not as an option, but as the ETF itself, then I think you get something. You probably come back down to almost even, or maybe even a little better. But I think the better strategy is to hold into next week, sometime next week, which will be after options expiration, and I think that's when they'll finally let it burn. Okay, I'm Dennis Hudson, orangequant.com, and I'm out of here, and here's a little call.